Matt from the Trade Brigade here doing a technical analysis on ticker symbol NIO for NIO Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talked about it just yesterday. What I want to discuss from today's price action specifically is the continuation of the balance that's in store, and we were discussing this in the broad market, right? The market generally moves from an area of balance to an area of excess, right? So when you get balance, that's where you want to pay attention because likely the next move will be a period of excess. And you can see that in the past, right? If we do something like this, the market's balancing in this area, and when we break, we get some excess, right? We get that trend move to the downside. So this is a micro area of balance. If we break out, we would expect a trend move to take us to those next targets. And as of right now, if we take a look at the 30-minute time frame, we are getting higher lows as we approach the top end of the balance. So to me, the buyers are starting to make a stand here, and it looks fairly promising for some sort of either ascending triangle breakout, right? I could do something like this. There's your triangle. If this breaks out, then fantastic. We're looking for that gap to fill overhead essentially from 26 up to about 27.66, the flush point from the prior area of balance, right? Markets move from balance to excess back to balance. Maybe we would balance again up here. I'm sure you're sick of that sort of terminology, balance, excess, so on and so forth, but it's true. That's how markets move, right? We're building positions in here. We're building up energy as it gets released. There's your excess. There's that word once again. We can't forget about the downside though, right? Let's not just completely write that off. If this support trend line starts to break, so if our higher lows don't really hold up here and we start, doing something like this, equal lows, lower lows, first move is always to the low end of the area of consolidation, so 23.14. And if that goes, that's where we've discussed in the past the fact that this was a near vertical move, not a whole lot of market structure in there, so we should start looking at this gap as being the target closer to about 21.60. Again, it doesn't look like a likely scenario, but we have to take everything in this 2022 market with, both sort of sides of the coin as we're analyzing, right? There's been plenty of times this year where we've had fake breaks in both directions, so I want to at least bring it up. Again, does look promising for upside, so that's what I'm watching for personally. We also talked about the potential for this to look like an inverted head and shoulders. Neckline breaks here, takes us to fill the gap overhead and that target there. So leaning to the long side, but we know the deal if it starts to break the support trend line. That's going to wrap up today's video. If you enjoyed it or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.